Good morning. This is Larry Adams, Channel FSR, Central Illinois today. I'm joined with Matt Bennett, and thank goodness he got a haircut since the last time I saw him. But that's some good news. But Matt, sounds like we had some other good news today on a report.
Absolutely. These USDA reports have been kind of a kick in the teeth the last several years, really. I mean, I don't remember the last time we had a really positive, friendly, shocking, if you will, USDA report. And so you came in today to your planted acreage and quarterly stocks report expecting, that we still plant a lot of corn. I think that was the expectations, but maybe we dialed back just a little bit. A lot of folks thought, well, we probably took some corn acres and put them into soybeans because of profit margins. I certainly understand that discussion. That's something we talk about all the time. And then on quarterly stocks, we were wondering kind of what the disappearance of corn was, how much was used, And so I felt all along that actually quarterly stocks might be the friendly part of the report, and then acreage might just be kind of a ho-hum event. And then as soon as the report was released, I looked at the screen and we're up 8 or 9 cents on corn before I could even get the numbers from the USDA. And so, and I see that it's 92 million acres planted. To be honest, I had to look twice because I thought there's no way that we dropped 5 million acres, but that's what it was, And so quarterly stocks was actually a little bit of a bearish number, if you will. I mean, but the bottom line is when you extract 5 million acres and you're expecting 180 bushel yield, it doesn't take a rocket scientist. That's 800 million bushels or so that you're extracting from a potential supply and demand balance sheet. So, absolutely very friendly report as far as the corn was concerned. Soybeans, a little more of a neutral report, but still from a stocks perspective.
The acres didn't get added there, though, did they?
No, not really. I mean, acres only went from 83.5 to 83.8. And I would assume if you drop 5 million acres of corn, you're at least going to pick 4 million acres of beans up. And so I wouldn't have been surprised at all if you would have picked up 3 million acres of beans going into this. We were thinking 2 million acres of beans is what we picked up. But bottom line is USDA says 83.8. That puts the bean situation, though, at a potentially tight one. You could see some tightness moving forward because the supply and demand balance sheet on beans is already fairly tight, especially as compared to corn. And so, it was a very interesting report, friendly for both. Right before we started recording this here on Tuesday, the market was trading up 15 cents on soybeans corn and soybeans. Actually, beans were almost 20 cents there for a while. So very good report, very good way to kind of get this market stabilized for the time being.
We talked about, obviously, the acre change, but we didn't talk about the quality of the crops out there. Yesterday, I got a chance to travel pretty far north in Illinois, actually almost all the way to Chicago. And just going by, everything's still, as I look at it, everything's green, right? Obviously, everything's green through Illinois, there is. But however, there's holes in the fields, and the crop is behind as a whole for our 5-year average. And I know we discussed yesterday, actually, about you having some conversations with some people elsewhere across the Corn Belt with maybe not such advantageous soil moisture, right?
Yeah, absolutely. I mean, so I put out the newsletter over the weekend, and several people responded, and I've gotten a lot of responses lately. But there was different areas. Whether you're talking in several areas in Nebraska, they're running pivots hard. And some of these guys are saying the dryland corn may really struggle. If we get this dome of high pressure and it sets up and it's super hot because they're going into this with low soil moisture.
Sure.
There's people in southern Minnesota saying the same thing, that we're pretty dry. We need rain. We need it soon. You come into central Illinois, and there are places in central Illinois that have had too much rain. And it's interesting, the discrepancy back and forth. I would say that we're sitting in a really good spot where I'm at. A couple of our farms have been shortchanged on rain, but I can't complain. I feel pretty good. We did do a lot of replanting of ponds, like most people did in this part of the world. Those ponds are gone. We may as well just write them off because, they got full again afterwards. Now, that means that I've had plentiful moisture. So I'm complaining about something that I shouldn't be complaining about, essentially. And so, I've got to think overall this crop's in good shape. But keep in mind, the trade is assuming it's a monster crop right now. The trade is a 180 crop. And so, talking to some of my friends and meteorologist friends, they're saying that this first 2 weeks of July are going to be very hot and very dry. Most of the models are starting to come into agreement. You've got to think that just getting a bullish report, it could give us some opportunities to maybe make some sales that, we've been holding off. I keep saying, be patient. It's not that I knew anything was going on. It's just, it's a precarious place to sell corn when you're 50 or 60 cents below the spring insurance price. Because if the market whipsaws and goes up on you, you're going to be in a really bad situation if you've assumed huge production to get you to break even. And so I'm really hopeful what we're going to see here in the next couple of weeks is that the weather is going to offer us and afford us some opportunities to finally manage some risk in case this crop does turn around and we end up with a 180 national yield. You have a 180 national yield in 2020, and you're going to tank this market most likely from wherever we're at whenever it starts raining.
So, you said something about, people might take advantage of it, even though it's below the spring insurance rate. What would you do with some old corn right now? I mean, what would two things you do with old corn right now?
That's probably the number one question that I get, and it's a great question. What you have to keep in mind is the market is rallying today as we talk. When we get off this, it may not be rallying anymore. You never happen. So a rally is not a rally unless you sell some, first of all. Okay. Second of all, if we get much of a rally out of this weather scenario, we're going to hit the law of diminishing returns at some point, given the fact that you're going to have basis. It's going to have to start widening. Okay. Because there's going to be a fair amount of corn hit the market. And some of your end users have struggled to originate the corn. They thought they could originate. And so what they did was their basis levels got a little bit better and a little bit better. So the last 2 or 3 weeks, you wouldn't have expected it this year, but the basis got better. In that situation, as a producer, I want to reward the market on rallies incrementally. I'm not saying you sell it all. If you know you can make money, I have no problem with you selling it all.
Absolutely.
But if you do want to live to see another day, sell some today, sell some tomorrow if it goes on up more. Spread your risk out and give yourself an opportunity to take advantage of this good situation.
Would you give the same recommendation for like new crop also then, or what's your thoughts on that?
With new crop, I want to be very careful when I'm selling below the spring insurance price. If it's this early in the year and production is still a big unknown. Now, if I'm going into pollination with a full soil moisture profile, it's different than if I'm not. It gives me a little more advantage if I'm irrigating, and I know that I'm going to be able to get the water to the plant that it's going to need. That helps my situation as well. But whenever I'm drastically below the spring insurance price, I have to be really careful about the way that relationship works. And so that's a very complicated thing. And I would say that 2020 has been the most complicated marketing year that I can remember personally. And so, we just want to handle it properly. And if you do sell, that's not bad, but let's manage some risk just in case we're wrong, if you will, whatever wrong is there. But if the market marches on higher, I still want to be able to participate in that, especially if I don't raise the bushels I thought I was originally going to raise.
Yeah, you're right. So, you said this, we're going to have to carry these acres from here on out, right? So when's our next, is it after harvest? I mean, are we going to have to just wait till the end to basically see what we're going to have or predict, or what are your thoughts?
Once August starts coming in, you get some prevent plant numbers, okay? So some people assume that some of that was in today, part of the reason why acres were so low. But we really are going to use a 92 planted from here on forward. And then we will adjust based on prevent plant numbers. The next big report, if you will, is going to be in August. USDA will not be in the fields this August. It's the first year they haven't done that, but they feel like they shouldn't go until September from here on forward, because essentially it gives them a little more information. Crop's farther along, they know more about the crop. But the August crop report could be a very large one. Let's say we get a ridge for the next week to 10 days, but then we turn off wet again. We've seen that several times over the last few years. If that's the most people are going to tell you they think we're looking at a 180 national yield. So a lot is going to happen in the next 3 weeks. There's going to be a ton of movement, a ton of ebb and flow here. And as a producer, I need to know what I'm going to do depending on what the market does. I want to have a trap put in place if we do get back to 375 or 380 corn. I hope we do. And I'm not saying that we won't. If we do, what am I going to do with it though? Because then you're close enough to the spring insurance price, you can manage some of that risk. But if you're 40 cents below still, I just don't like it. it puts me in a bad spot as a risk manager. I feel like we're way too out of balance in that situation.
Yeah, I agree, Matthew. Hey, I appreciate your time again today. Any last comments you want to make or things you want to say?
Yeah, I mean, the bottom line is you just want to not get yourself too far out of balance as a producer. We have a really good thing today with the markets being up and getting friendly information. And don't kid yourself, 92 million acres is something that's not going away for a while. It's going to be a supportive factor. There's going to be some good that we can draw out of that, but let's not screw it up. Let's be very cautious about managing risk whenever we can manage it. And if the market takes off and gives us opportunities, let's be ready for them.
That's good. Hey, how can they get a hold of you if they want to ask some questions or making comments?
Yeah, I mean, a lot of folks will email me from my newsletter. I've gotten a ton of correspondence lately, but a lot of folks also go through like Twitter, at Chief321. It's a great place to be able to get a hold of me and just shoot the bull. If they want to send me a direct message, I'll always respond. It may take me a little bit, but those are the two areas they can get a hold of me the easiest.
Gotcha. Well, thank you again for your time. If you want to get a hold of me, AgAdams99 on Twitter. And we appreciate your time today, Matthew, and look forward to seeing you next time.
Yep. Thanks for having me.